Hello, I'm Finola Burke from RaaS, and today we're focusing on purpose-led PropTech, rent.com.au, ASX ticker RNT, and joining me to speak on the recent quarterly results is Greg Bader, the CEO of rent.com.au. Thanks, Greg, for joining me.
Thank you, and nice chatting again.
Yeah, great to have you back. So rent.com.au reported quarterly revenue growth of 12%, up to 0.71 million, which was against a seasonally strong Q3. With much of that growth was coming through from resurgence in advertising revenue. Now, part of your stated strategy was to diversify your advertising revenues. I think you talked about that in your Q3 results. Should we expect to see more of this diversification continue?
I think it's just logical that we do that. The building segment, first home builders, etc., are obviously a perfect match for our demographic, but given the challenges in that part of the industry, so we needed to look elsewhere. But we want to do it. We want to do it right. We don't see ourselves as a massive ad portal, so the ads need to be relevant and targeted, and that's where the TPG partnership is really interesting. So one of the challenges. So we've been doing NBN on our site for years, and NBN's become pretty ubiquitous now, so most properties have it. So we're looking to take that a little bit further. So partnering with TPG, we're actually able to bring in the 5G layer. Now, 5G has been around for a while now, but it's starting to become quite interesting in the sense that the 5G home broadband packages are on a price parity with fixed line. Now, if you look at the wireless side of it for a renter's perspective, you don't need to muck around with bloody MDFs and cables and whatnot. You can set it up before you move in, etc. One of the challenges the 5G providers have is that they're rolling out their network, so the coverage is not at the same level as 4G, and the coverage requirements are actually a bit tighter given the high volumes of data. So long story short, we're able to service qualify or SQ a property at a per property level and then indicate whether the 5G is available. So we're about to roll that through, working closely with them. They're great to work with, and we think we're going to be able to offer our customers not only targeted, relevant advertising, but something that actually adds value to them as well.
And Greg, I think it's fair to say that the TPG campaign has only really just commenced, so there's more to come in this quarter, isn't there?
Correct. Yeah. No, we've literally just got up and running, and there's a number of layers to it. Some of them are up and running, but there's more to be rolled out. So, yeah, the current quarter will see full contribution.
And you also saw some really good growth in your rent bond product for the core platform. Can you talk about what you saw during the quarter?
Yeah, we've been doing rent bond for a while now. It's hard to measure, but I'm pretty confident that we're the largest provider of rent bond finance. Once again, the product is a little bit different than your traditional unsecured personal loan in the fact that we offer that 21-day free component. The reason we do that is because whilst there's legislation that controls when a rent bond should be returned to the renter so they can get into the next property, in the reality, there's always an overlap. So that 21 days allow people to transition between properties. So once again, fits to our theme of doing the right thing by renters, etc. Well, a couple of months now, we opened up rent bond to the wider market. So rather than just keeping it just for rent customers, we opened it up to others, and we've got a number of partners using the product. It's got its own website, etc. Now, the reason behind that for us is that we really want to get scale on the product. So that last quarter, $3.5 million worth of bonds financed was really good. Worked closely with our partner Fairgo Finance, and we're looking at opportunities to take that further in terms of the performance of the product from a conversion point of view, from a cost point of view, but also what other things can we do. And we see a future where there's the opportunity for renters or landlords to provide funding into that model as well, get a high rate of return as a product, and then obviously lower our cost of capital on that side as well. So it's a moving target, but that's our long-term aspiration, is that is largely a self-managed, self-contained product with renters supplying the funding.
And your RentPlay platform also delivered record revenues and customers in the June quarter. Are you happy with its progress?
I would love more, and we're head down, bum up, focused on getting more. we have an aspirational target to be 10% market share over a couple of years. So we really need to lift that rate of growth. Good quarter. About 40% of customers are what we call off the street. They're people that are choosing to use RentPay, and 60% are through agent partners. So we've added new agent partners during the quarter. We've added one yesterday, actually, sizable. So we're getting more and more growth on that side as well. On the consumer side, we're playing around with our marketing. We're turning it up, we're turning it down, we're trying different things. We're getting a really good view now from our acquisition cost point of view. And we're actually starting to see some interesting differences. For example, the churn rate of someone off the street is higher than an agent side. Now, that kind of is logical, right? Because the agent's encouraging someone to use the product. People on the consumer side, we see have a much higher adoption of our other products, whether they be score builder, bill smoothing, etc. Once again, not unusual, given that's the focus of a lot of our advertising. What is unusual, I think anyway, is the high percentage of credit card use. We're at 13% across the base now, and for customers coming in off the street, it's much closer to 30%. So we're encouraged by that, and we're actually doing quite a bit of work in the background at the moment, and nothing to announce today, but certainly over the next couple of months, we expect to see some movement on our credit card fees and whatnot. We intend to be the lowest in market in that space. So there's a lot happening. More to do. During the quarter, we attended a couple of the large property conferences up in Gold Coast, Property Manager Conference and the Real Estate Agent Conference. We had a booth. We had great meetings with a number of agencies, and for the first time, I mean, given that we're Perth-based, which is a bit of a problem geographically, we're actually able to sit down and chat with a lot of these people. So follow-up conversations are ongoing, and we've already had a couple of wins out of it. So it was good to do.
And Greg, you've talked in the past about having aspirations to expand the transactional basis of RentPay. Is there anything in coming up in the next couple of quarters that we can expect to see?
Yeah, there is. There's a couple of smaller pieces. The rewards one is interesting for us, and it's something that for those that follow the rewards space, that we've got our giants, we've got the Qantas frequent flyers, we've got Flybuys. Those guys are fantastic platforms, but you certainly need a level of scale that we're not yet at to participate there. But then there are a number of other platforms that are more suited to our size, and we're seeing a bit of a morph in the market where people are moving away from the coupon codey type rewards, which require a fair bit of effort, through to cardling type programs where it's passive and simply, you can spend as you do now and you'll get rewards back into your wallet. So that's something we're quite interested in. It once again fits with our goal here of your everyday spending contributes to your rent, etc., etc. The mortgage piece is still, I don't want to say passion project because then it sounds bad, but the mortgage piece for me is really, really important. So we have a large percentage of our renting base will transition to a mortgage. They need to grow a deposit and they need to demonstrate their ability to service a mortgage. So with RentPay, I believe we can do both of those things. So we're in a number of models going through at the moment, from creating our own fund, potentially using those consumer funds via rent bond, etc., through to partnering with banks and high interest savings account. But the beauty of it is where a person's able to vary their contribution. Their rent is obviously a fixed amount each month, but they can add more to that. That goes into a high interest savings account. We can combine the two in terms of target setting, goal setting. And then from a mortgage partner point of view, we have a consumer that is interested in a mortgage, interested in an introduction to a bank, and then can transition when the timing's right. So I do think there's a lot in that product. Incredibly complex, both from a regulatory legal point of view, but also getting the customer proposition right. So we're working through that.
And it's early days in FY24, but what are you seeing in terms of trading conditions, and how is this impacting rent.com.au?
Look, there's a lot of talk in the market about interest rates, property prices, and finally renting's getting a bit of a voice as well, unfortunately not in a positive sense. It is still really tough out there. We're starting to see, probably 6 months ago, it was just ludicrously tough everywhere. We're starting to see a little bit of easing, Sydney, Melbourne, but we're still below average vacancies and all that. Other cities, Queensland, Western Australia are diabolical in terms of trying to find a rent. So some of our products that are based on people transitioning need to lift, and then other products around, like our rent check is doing really well. So look, I don't think there's any short-term fixes at a federal or state government level to the housing situation. I think there's a lot of ideas out there. I'm hearing talk on the about NRAS being put back in place. I mean, to me, that was one of the most logical solutions. And then we've got other certain states doing things that seem to be counterintuitive in terms of increasing rental supply, etc. So it's a little bit of a mixed bag across there, but the one unifying thing is that renters are still doing it tough, and certainly the cost of living side of it's not helping. We're trying to do our bit with products like our bill smoothing, etc. You can't buy electricity and gas cheaper in the country than through that product. So there's more to do in that space. Look, overall, we need to stick to our knitting. We need to add more rent pay customers. We need to lift up the revenue side on rent.com.au, both through our advertising and also our product sales, and that's what we're focused on.
Well, thank you, Greg, for joining me today to discuss the quarterly results and outlook for rent.com.au. I'm looking forward to catching up with you through the course of the year to see how you're progressing.
Thanks very much, Finola.